Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on the podcast, I have Gus Koutoumanos. Gus was born in Midland and raised in Orillia and Huntsville before coming to Toronto in 1984. After high school, he went to obtain a Bachelor of Commerce from McMaster University. He worked at TD Bank until 1999 before starting his career as a mortgage agent. Welcome to the podcast, Gus.
Thank you very much, Harris, for having me.
Gus, I was looking at your profile. Safe to say you've spent your entire career in mortgages in one way or another, whether it's at a big bank or the mortgage brokering side of the industry. Can you give our listeners kind of just a run through of was this something that you knew as soon as you had to get a career that you're going to get into mortgage brokering, or is this something that you kind of fell into? What was your kind of entire process? Because I'm looking at your undergrad, it's in finance and accounting. So it's similar. So did you kind of know during your undergrad years that you're getting into brokering, or was it something that you kind of fell into?
It was more something I fell into while I worked at the bank. So I started working for TD Bank on the personal side in the branches after I graduated from McMaster. And I had always wanted to get into into the financial markets and the trading and analyzing companies. That's why my background in financing and accounting. But once I wound up in the branch, I really enjoyed the connection with, everyday people walking in and out of the branch. We had hundreds of people a day walking into the branch. And so when I started learning credit, loans, mortgages, line of credits, I really enjoyed, I enjoyed the satisfaction I got by helping out just everyday people, and it was really satisfying. So, I would kind of help out the mortgage. The TD Bank had what was called area mortgage managers that would run around to real estate offices and help people obtain financing. So what I ended up doing was, helping out these guys whenever they needed help. And then I eventually applied to become an area mortgage manager and was successful in obtaining that position. And then that part of the bank kind of fell apart. All the existing mortgage guys at TD, they went independent, went to independent brokers. And then I followed suit about a year later. So I left the TD Bank to be able to work with many different lenders. And I still work with TD Bank today, just not as an employee. I work as a mortgage agent through a mortgage broker.
Yeah. So, going from, I guess, a TD to mortgage brokering, that's kind of a big jump, because I think most people kind of sitting in a career, they're like, well, you know what, working for a big bank, it feels good. It's like a comfortable job. Brokering, I feel like, and I'm sure most of my listeners know, is not something where you get a paycheck at the end of the week. You get as many clients as you help, and if you don't help anyone, you're not going to get anything. So what made you take that risk? Because somebody could say it's a decent jump to go from a big bank to something that may may not be known as much, especially at the time. I know now brokering has taken a big market share because I personally feel like it's the way to go. But the time that you may have entered, it may not have been as big. So what kind of got you to be like, all right, I'm going to take this jump?
Well, you're absolutely right. It was a decision that I had to think about because a career at the bank could be very prosperous also, and it's guaranteed. Um, I was single. I didn't have any kids at the time. I was looking to make a change, whether it was at the bank. Like my initial intent was to stay at the bank and be a broker
Hmm.
through the bank. But again, that was a pay cut, and you're not guaranteed anything. If you don't get customers, you don't get paid. But at the time, I met my the broker that I'm still with today. When I went interviewed with him, he actually offered to when he met me for 5 minutes. He said, "Okay, you can come on the team." And he said, just so you know, you're not going to make any money for, 3, 4 months until you start putting deals together and they close, and then you're going to get paid after.
Yeah.
I said, I understand that. He goes, how much are your monthly expenses every month? So I told him what they were, and he said, well, I'll cover them for you until you get going.
Oh wow. So
I
that's
thought
pretty
that
good.
was,
I mean,
I
now
thought that was,
it's a
either he
lifesaver
saw,
sometimes.
yes, he saw something in me. I never took him up on that offer, but just knowing I had
Yeah.
that backup if I needed it, it just made me it gave me the extra push I needed. I did end up getting help, but it was from my cousin who gave me the same offer. He said, "Leave the bank." He said, "Go broker, and then I'll look after you."
Oh, so you had a lot of people kind of pushing
Yeah,
for you to kind of leave the bank.
yeah, I did.
Yeah, I mean, for me, whenever I guess one of my clients come to me and they ask if like whether they should go for a bank or a broker, and I know that the broker market has about 50% of the volume now, I will always suggest the broker just because with the bank, and I love banks. Again, we work with TD as a law firm as well. Great bank to get a mortgage from, but at the same time, with a bank, I feel like it's like they've got their set products. They may be great products, but if you've got like a shoe size 10 and a 12 and the client's an 11, they're going to give you a 12 just because that's the only thing that'll fit. Whereas with a broker, you can go in and you have a bunch of lenders. I'm sure that you have over 2, 3 dozen lenders, and that you can kind of fit the client where they need to be.
That's exactly right. I mean, pretty much the idea of brokering. I mean, now, like you said, we have a huge share of the market, but back in the day, brokers were just known to do deals that banks couldn't do
Yeah.
and would charge, crazy amounts of money to get deals done. But that wasn't the case then. It was just a misunderstanding, and it's not the case now. So we actually get paid from the banks when we take customers to them. And so there's no cost to the client. And most of the time, I'd say 95% of the time, we can get you a better rate at your own bank than you can get at your bank.
Yeah. It's
So
because,
it's
I
a
mean,
win-win
yeah.
situation. This is why I like it so much.
Yeah. No, it's also because I feel like with brokers, if I'm going to a bank, I have to kind of leverage my relationship with the bank, and based on that, I can negotiate whatever I can. If I go through a broker, I'm negotiating through the broker's kind of relationship, and the broker has a relationship that I can't build because they're talking to the bank every single day with numerous different clients, and the bank's naturally going to treat that as hard of a pill as it may be to swallow for a lot of people. They will naturally treat somebody who's bringing them business every day a little bit differently than somebody who's going to renew their mortgage every 5 years.
Exactly. This is and when people ask me why should I use a broker, I can go to the bank myself. I got a good job. I got good savings, and I tell them that. I say, well, you don't send $3 billion a year to the bank in business,
Yeah.
right? So we get preferred rates, and that's just how it is. It's a volumes game, and we even have lenders, not the bricks and mortar banks, like the monoline lenders. They're just like they pretty much have an office downtown with a floor. Customers don't see them. They get their money from the bank, and then they just put their label on it. But the rates we can get from them, there's huge difference, like up to half a point, 3/4 of a point less than what the banks are offering. Now they're
Yeah.
for select deals, but they're out there. and people just have to know enough to call a broker, so you can tap
Yeah.
into that.
Yeah, and I think Canadians, their mindset kind of has changed as well. I felt like Canadians before were like, you know what, if I need to go to a brand name bank, right? Whereas that may not be the best decision for you, right? You may not need to go to a brand name bank. Money is first of all money. Wherever you get it from, it's the same dollar, right? But like
Yeah.
for example, like I've had people who are self-employed they say, you know what, I really want to go to like TD or RBC, and I'm thinking, well, I mean, it's not my position to say anything, but do you really want to declare more income to go and save a few basis points? Like, does it really save you money at the end?
That that's the case. So self-employed people, they're a funny bunch. They've gotten much better, but 10 years ago, everybody wanted to go to the bank,
Yeah.
which is great. If we can put you in the bank, and there were companies out there, you just make a letter. I'm self-employed. I make this much money. Okay, fine. But now what's happened was the government came out with the AML issues, right? So they've said to the bank, no more equity deals. So prior to all this AML stuff, the
Mm-hmm.
banks would offer equity lending. So if you had up to 65%, if you had a house that was pretty much paid for and you wanted to take money out, or they would give you up to 65%, and all you needed to qualify was proof that you didn't owe the government any taxes. So
Oh wow.
this was great. People were eating this up. They're showing $3,000 a year income and getting $700,000 mortgages.
Yeah.
So the government says, well, look, Mr. Bank, you're not allowed to give those types of mortgages anymore, because if this guy is showing $3,000 a year and paying a $700,000 mortgage, there's something wrong here.
Yeah.
So if you want to give a mortgage, you now have to follow these guidelines. So if a customer wants to get a mortgage at a bank, he needs to show, for example, 150,000 a year net income in order to get that mortgage. And he's self-employed; he doesn't show anywhere near that. So what has to happen is he's got to go for 2 years, declaring $150,000 a year,
Mm-hmm.
bring that paperwork to the bank so he can get a bank mortgage. But in those 2 years, you've paid over $100,000 in income tax
Yeah.
just to get a mortgage to the bank.
Yeah.
So a B lender has other options where they use your gross deposits into your business account, and that's what they use to verify your income. So as long as you have decent deposits into your business account, doesn't matter what you show personally net, the B lender will work with you. However, they will charge you a fee, usually 1%, and they'll a little bit higher on the interest rate. You might have to pay a 0.5% higher on the interest rate. But at the end of the day, if it costs you an extra 10 grand a year to
Yeah.
get this B lender mortgage, it's a lot better than paying taxes to the government and waiting 2 years before you can even qualify for a mortgage at a bank.
Yeah. No, I think a lot of Canadians are kind of like, oh my God, it's taboo to pay these fees and whatever. But and at the end of the day, if you want to build wealth, you're figuring out, you know what, money spent is money spent. It doesn't matter whether you're giving it to one person or the other. It's out of your pocket, right? And so where are you minimizing that outflow and kind of maximizing what you're retaining? And so like for self-employed, I say for every single person, the reason like they should be going to a mortgage broker is for this, because if you went to a bank and you said, hey, listen, I've got I'm self-employed, I'm making 3,000, right? What are they going to say? They're going to say, okay, go home, and you know what, I want you to declare 150,000 for the next 2 years, then come back. And that's what somebody's going to do. Whereas if you go to a broker, I don't think that I'll be. I'm sure you can say, "Hey, listen, if you want to go to TD, you could do this." But you've got few banks that if you want to go there, you need to do A, B, and C, and X, Y, and Z for this one. So they have options to consider and go home and figure out. You know what? Where are my expenses the least? Where are they the most? And where can I kind of grow the most amount of wealth over the next 10, 15, 20 years?
Exactly. And you know what? The market has been very it's been hot in the last couple of years. And so even if it costs you a little bit more to get your mortgage, your equity is, you're at, even now, I mean, okay, the market's a little bit depressed right now, but it's at the same levels it was last year at this time.
Yeah.
It hasn't really, okay, it's kind of come down, but only from this, the peaks that we had at the beginning of the year. So you're still, your equity in your house, I mean, is it's always better to get into the market sooner,
Mm,
because I've had customers for the last 25 years, and a few of my friends that just never got into the game. They never got into it. They never purchased a
yeah,
property. They've saved money, that's fine, but they never ended up purchasing a property, and they're kicking themselves now because 25 years ago you could have bought a house for 250,000 in
yeah,
Toronto,
yeah.
and today you need $1,500,000 for it. So
Today you buy a shed for 250,000. You get a back alley freaking.
yeah, you can't even get one of those laneway apartments on top of garages.
Yeah,
But the market, the mentality for using brokers has really it's changed, and we try, like, just in the last 2 years, the concept of it's okay to get a B lender and pay a little bit of a fee has sunk in to most of my customers, and they have went that route instead of trying to kick themselves that they can't get into a bank. Because you're right, they bought a house, they were self-employed 10 years ago, they qualified for it because they had a big down payment, and banks had these special programs. Now they have all this equity sitting in their house, they have things to do, they have expenses to pay, they want to buy another property, and they're using the B lenders, and they're
yeah.
great. I mean, there's really, other than a few $100s you got to pay extra for your mortgage a month, if that's the case. I mean, last year a B lender's rates are 2% less than what a bank's rates are today. So it's just market timing also.
No, I mean, and what you kind of covered is exactly another reason why I push brokers is because if you have a really good uh, mortgage specialist at a bank, 5 years down the line when you're coming into renew or whatever, they're not going to be there anymore. They're going to be promoted, they're gone, and you're going to have somebody else. And if they're there, you're going to question why they're still there for after 5 years. With a mortgage broker, you're like, right, like in your case, you were gone. You're like, all right, I'm good at this, I'm bye, right?
Yeah,
But
pretty
with a
cool.
mortgage broker, if the mortgage broker is good, they're going to be around. It's kind of the opposite. Whereas if the mortgage broker is not good, he's not going to be around in 5 years, and you kind of understand where your decision went with that. But if they are good, they're going to be there 5 years, and you want to build a long-term relationship. So it's not like you're buying your first home, you're buying your second home, you're refinancing to buy an investment property, a cottage. You got to get a line of credit because your kid's going off to college. Like that is something that's relationship based, and to stick with one bank for every single thing, I feel like is naive because all these things are inherently different products because they're different things that you're buying. It's not just like a mortgage is a mortgage. The mortgage is tied very much to the asset that you're kind of collateralizing and the purpose that you're using it for. And so if you go to a mortgage broker, they can say, hey, well, you know what, this mortgage is really good here, but if you want to put a second line or a credit line on there, another bank's good. Or if you want to buy investment property, another bank is good. So you're kind of optimizing everything, so you kind of get paid, you pay out the least amount possible.
Yeah, we're a one-stop shop. You're absolutely right. And I've had customers for since for 23 years now, and I'm doing mortgages for their kids,
Yeah,
which is so nice to see. Because the
yeah,
parents I still keep in touch with me. Most of my business is referrals. I gotta admit, I don't do very much advertising. Although this month I did sign up for some of those the bus stop
oh
signs.
yeah.
Yeah, and so I'm going to try a few signs, one in Hamilton and two in Toronto, because I've been getting, like, business has slowed down a little bit in the last few
Hmm.
months. I mean, I can see that, but the calls haven't slowed down, and they've actually increased because there's so many people out there that are uncertain about what's going to happen, where rates going, and so just to be there for them,
Yeah,
questions that they have to answer, so I can explain to them, the difference between the prime rate and the fixed rates, and when are they going to increase rates again, and my mortgage is coming due. Everyone has a ton of questions, so I'm thankful to have a big client base, and they reach
yeah,
out to me when they have
yeah.
questions. So that's I'm going to try to do a little campaign. You have questions, just call. I don't need to do your mortgage right now. I can wait for a year or two until it comes for renewal. And if I can help you right now, consolidate a few debts or help you with a renewal of a mortgage or a transfer of a mortgage, then I will.
So what is it? What is it like working with you? Are you completely? digital? Do you see people in person? Like, what's the entire process? Do I give you a call, shoot you an email? Like, what's the entire process from like kind of beginning to end to work with you to get a mortgage?
So firstly, you'll get my number from someone, and usually it's just someone will just pass my number here. Call this guy.
So I'll
Um,
have so any of the listeners who want to reach out to Gus, his contact information, depending on where you're listening, is on the side or below. So it's up to you. But yeah, so sorry. So you get your number, give Gus a call, and then
yeah, so I answer my phone all times of the day. I don't want to say, but even if I'm in the bathroom, I'll answer my phone. Um, and and, uh, and I work out of my house, so I have I have lots of everything I need is at my disposal. I have no problem meeting with customers, but most people, until they want to first pick your brain to see what you have to offer, to see if it's even worth it before they meet. And nowadays, I've managed to make a little website. I have an application online.
hmm
I finally figured out how to use DocuSign, and
yeah,
it's been a, because everyone accepts electronic signatures
yeah.
now. So people, I mean, it's funny. I don't meet very many people. I may have met with 5 clients this year. Most of my
Wow.
stuff is done remotely, and people don't mind that because it's at their convenience. A lot of times, like if you want to make an appointment with your branch to go in, you can't call the person you're making the appointment with. You got to somehow call the branch number that has 100 different options, or go into the branch and then make an appointment with somebody. Nobody will see you right away.
hmm
So, I'll just drop everything I'm doing and then deal with that customer at that time because people really appreciate that. And they'll call me. Sometimes people will have, they'll call you, they'll talk to them for over 10 minutes and then call you 5 times right after because they forgot what they wanted to ask you.
Mm,
But that's a good thing because you're calling somebody you don't know, you're scared, you're nervous because your money is at stake. The more that they can call me after that fact means I made them that much more comfortable
yeah,
initially talking with me.
yeah.
And so what I'll do is I'll email them an application. They can fill it out online or they can fill it out handwritten. I can send them. They can send me back pics on their phone. I prefer scan, but I can work with pics. And then people that like most people are okay to use the scanning app on their cell phone. And if they're
Mm,
not, then they have kids that know how to do it. So the process is pretty simple. I send out an email. You send me back some information. I get your approval. I can meet with you to sign it, or I can send it out to DocuSign. You give me your lawyer's info. Bank sends the stuff, instructions to the lawyer, and then you sign with your lawyer. And you can even sign remotely with your lawyer now.
yeah. That's what I mean, COVID was not the best thing, but like for lawyers, for our end, it helped a lot in that before legally we had to see everybody in person. Now we could do everything online. And like you said, I don't think I've met anyone this year in person. I've met last year, I met like one or two people in person, and that was it. That was it. Everybody's through Teams or Zoom, and then that's it. Like you sign and you're good. I don't think it's never been this easy to take out $1 million from the bank.
Oh, I agree. I agree. But some people they just want to meet you. And that again, I have no problem. I'm pretty centrally located. I'm at like a Keelan 401.
Oh wow, yeah.
So
So that's pretty like in the middle of Toronto, wherever you are, you have access to that.
and we do mortgages across Canada too. So we're licensed to deal in every province
Oh nice.
with the banks.
Yeah.
So yeah, it really helps.
So I wanna change gears a little bit now, and I'm gonna start off with kind of like a crystal ball question. So I know interest rates are on everyone's minds, for good or for bad. Everybody's kind of looking at, oh my God, Bank of Canada is doing this or that with the interest rates. Where do you predict interest rates to be by the end of this year, if you had to kind of peg it somewhere?
So my outlook on rates is hasn't been the same as everyone else's. I was kind of predicting that rates weren't going to go up as much as they did. I kind of see them as like the stock market. You get a huge upswing in a
Yeah.
stock, and then all of a sudden it calms down. So I don't think that they're gonna if they may raise them again a little bit. So what rate we're talking about here is the Bank of Canada, the overnight lending rate that
Yeah,
they raised.
yeah.
It's tied in with the prime rate. The fixed rates are based on the I guess on the 30-year bonds,
Hmm.
but they generally go up together. Usually, the fixed rates will go up, and the variable rates will follow. Um, Look, I think a lot of this inflation was tied to a shortage of product. And so right now, whoever purchased products for resale had to pay a lot of money for them because there was a shortage. And when there's a shortage of something, prices go up. But from what I hear, the supply chain is opening up again, and the cheaper products are on their way into the market, which in the next 6 to 8 months are going to flood the market and hopefully bring down the inflation and not have a hike in rates. So I think in the next year, rates are going to taper off and may start to come down again.
So when would you say they're going to start coming down? If you had to put, I'm not like obviously I'm not going to hold you to this, but
Yeah,
maybe.
I know, and that's so
Um,
tough because I got to tell
yeah,
people, when they call me, I said, look, I'm just giving you my opinion.
yeah,
You got to call other
yeah,
people. You got to listen to the news. But I think that so right now we're at 5.45 for variable, and roughly the same for a 5-year fixed. Anyone renewing their mortgage right now, I'm recommending that you stay short term or even take a variable rate. So short term meaning 1 or 2 years,
yeah,
and a variable rate right now is roughly around 5%. So you're a little bit lower on a variable. But anyone who took the variable, like 2 years ago and they had like prime minus 90, and they were at like 1.5%, is still today at 4.5%, because prime is, they're still much lower than what everyone else is having to lock in. But I just say stay short term for the next year or two, and I'm hoping to see by you know February March rates tapering off and starting to come down.
yeah. No, I kind of have the same feeling. I'm with you in that I did not expect it to go up this fast, this quickly. But even having said that, if you look at like what's happened, like I mean, what is it, January of this month, year over year, house prices are up 30%. And at now, I think at best, outside of the sensational news, I feel like we've dropped maybe 10%. And there's people who are on the sidelines thinking, you know what, we're going to like figure out when we hit the bottom of the market and then we're going to jump in. And I'm like, this is the worst. That's the worst thing you could do. Now is probably the best time to buy because there's one thing that you can consider price. Price is good too, but you also have to consider last year people were paying 30% year over year. You're going into a house you could not look at, you couldn't put a financing condition, you couldn't put an inspection condition, and you were supposed to bid blindly over whatever the listing price was and pray to God that you got accepted, right?
Yeah,
But now you can actually go and actually put in a condition, talk to your broker, and talk to everybody you know and see, okay, well, you know what, get the house inspected, all this other stuff, and then actually buy a house. And if you're thinking that you're going to look at find the price when it's right at the bottom, that's impossible because when you know where the bottom is, it's on its way up, and it's going to shoot up higher much faster than it took to come down.
yeah, I can't agree more. It's so important too when so I think I think it's a good time to buy right now, even though your financing costs are going to be a little bit higher. House prices, some of them are down. I mean, 10% in the city, and some even as much as 30% in the outskirts. So
Mm.
people are getting decent deals, and if we stay, I mean, our outlook is the rates might come down a bit. Looks like hopefully they're going to come down a bit, and you're going to make up for it in the next couple of years. I mean, and the you mentioned the financing conditions, inspection conditions, so important in a market
Yeah.
that's shaped like this because you might pay 1.2 million for a house, even though it was listed for 1.3 million, you got it $100,000 less. You're very happy with the purchase. However, the bank is not going to value your purchase and sale agreement the value of your house at what your personal sale agreement says, they're going to order an appraisal, and an appraisal is going to give the bank the value that they're going to use. Now, 9 times out of 10, it comes in on the money, but we saw in the last 6 months, people
Yeah.
making firm offers with no conditions were running into issues when it came time to appraise the house because some of them, the bank didn't feel it was worth what they paid for it. The appraiser goes out and they do a search of comparable homes that sold in the last 60 days. And if the value isn't there, then you have to cough up more money for your purchase. And
Yeah.
it really becomes messy. And I've had a few of those, and thank God we managed to wiggle our way out of them.
I mean, and there's also the fact that I think there's hidden costs that aren't there anymore. And I know that we've had a few cases where every single time, I think this happened in 2017 too, when there was a bidding wars, and last year there was crazy bidding wars where people couldn't put in house inspection conditions. They buy a house for 1.5 million, and then when they move in the next day, the basement's flooded. And I'm like, well, they're like, is there anything that we could do? I'm like, no, you bought it as is. You didn't put in a inspection condition. This is what comes out when you do an inspection condition. And now you have it, and you have to spend another 50,000, 100,000 to fix it. But that's what it is. And so people don't also, at this point, they don't see those costs because they don't think that that's going to happen. But it happens more often than you think. Then now you can actually go in with a condition, check out, and make sure that the house is fine before you actually buy the house.
Yes, exactly. I'm sorry, my dog is barking. I just
It's
closed
all
my
good.
door.
All
I'm
right.
just going to close my door. She saw her girlfriend next door.
All good. So I want to kind of now move to like kind of what we were talking about prior to kind of the us getting on the podcast, which was refinancing. And I know that a lot of Canadians are thinking, you know what, rates are going up, and they're actually afraid to have conversations with financial professionals to be like, you know what, if I am up for renewal in the next year or so, let it just sit, and whichever bank I'm at, I'm fine with them. And I kind of want. And I always say that's a bad idea because it doesn't matter if the rates are going up. Just because you're closing your eyes doesn't mean it's going to go away. I always kind of recommend that they reach out to their mortgage brokers to see what's going on. What's kind of your opinion and take on how Canadians should be approaching renewals in this kind of market right now?
So for renewals, what I recommend people do is the ones that I've set up at banks, TD, Scotia, the A
Mm,
lenders. Banks will early renew your mortgage up to 6 months before its maturity. And because they already have you as a customer, they will offer you the rates. They'll offer you better rates just because you're existing. They don't have to put the effort into, sourcing another mortgage and paying a broker their
mm,
fees and, paying their legal department. They already have you. All they need to do is renew. So you got to contact your branch 6 months before you renew if you're at a bank, just to see what they're offering, because you could get a better rate than what's out there in the market. For B lenders, people renewing, everyone's been getting their renewal in this year, and the rates are like 6.5%, 7%. Meanwhile, their mortgage was at 3.5%
mm,
2 years ago. But sometimes it's not worth it to go. If you're at a B lender, you got to go to another B lender, and the initial upfront costs are gonna,
mm,
even if you can get 1% less at another B lender for your renewal, your legal fees, your appraisal fee, is going to outweigh that. So what we do is you always call your broker back. Call them back either way, but call your broker back. They can negotiate with a B lender your renewal. And save you a few points without having to go through the whole process of moving your mortgage out. And so that's for renewals. And if you're renewing at a bank and you haven't contacted them 6 months before, they're going to send you a renewal agreement. You're going to see the rates on there, but don't
mm,
take those rates for face value. Give the bank a call, or again, give your broker a call and say, these are the rates my bank has given me. Because if TD Bank happens to send out a renewal, that's just going to be their posted rates, not going to be their discounted rates.
yeah.
Always call a broker and say, hey, what's the 5-year rate out there? What's the 3-year? What's your best variable? And then, because if your mortgage is renewing in 30 days, we have lots of time just to transfer your mortgage out at no cost to you to another lender at
Yeah.
a better rate. We have banks coming out with specials all the time, especially if it's insurable, the mortgage, meaning if the loan to
Mm.
value is under 65%, or under 80%. There's certain criteria you have to meet, but we can get you a better rate. Just transfer your mortgage from one bank to another. Um, so that's the renewal. Then there's the refinance. So some
Mm.
people, they're like, okay, my mortgage is coming for renewal, and I need another 50 grand because I want to pay off my car loan or I want to pay off my credit cards. Um, and now, for qualifying purposes, they're not able to qualify because the government has the banks use what's called a prescribed rate, or the stress test rate,
Yeah.
for qualifying mortgages. So if your mortgage is coming up for renewal, you got a $500,000 mortgage and you want an extra 50 grand, just because you qualified for it 5 years ago, you're not going to, even if you make the same amount of money and sometimes more, you're not going to qualify now because you qualified 5 years ago at 5% was the stress test rate. Now the stress test is at 7.5. So
Oh
the bank's
wow.
going to be like, sorry, I can't give you this. I can't give you the extra 50 grand. You're going to be like, okay, fine, just renew my mortgage. And now you got this other $50,000 of debt that you're stuck with. You don't know what to do with. So in that case, you leave your mortgage at the bank, you call your broker, and you ask them for, because we can source line of credits at other institutions
Mm.
that can reduce your cost of borrowing. So you're paying, 30% on your credit card, or you're paying an $800 a month car loan payment that only has $10,000 or $20,000 left on it, but it's just hard for you to maintain. So you can look at leaving your first mortgage where it is, getting a line of credit behind your existing mortgage, sometimes at the same bank, sometimes at other institutions. But put it this way: if you have to pay out $20,000 car loan, and on a line of credit, it's like $75 a month interest only, and you're
Yeah.
saving $800 a month that you're normally paying on that car loan. So it puts people in a much better position with their cash flow and makes you feel better until we see what happens in the next year or so.
It gives you options because costs kind of went up everywhere. Right. It was not even just like one place. It was like your grocery bills went up, your whatever, like your mortgage costs and everything. So you're
Yeah.
kind of like you need options, not necessarily because you know what I need to spend more money, but in case something happens, that cushion that you thought you had is no longer there.
And especially people who took a variable rate mortgage,
Yeah.
because variable's been the way to go for the last 20 years,
Yeah.
always. And even in today's environment, it is still the cheapest option compared to fixed. It always is. That's why you get a little bit better deal, because you're taking the risk of a variable mortgage. But people are kind of kicking themselves today because they could have locked in for 2.5, but they've opted for the 1.5 variable option 2 years
Yeah.
ago, which
Yeah.
is fine. You saved the money then. Now you got to pay it back.
Yeah.
Um,
No, 100%.
it's,
But
and
so
and if you
yeah. Sorry, what were you gonna say?
Oh, I was just going to say, if you again, trying to time the interest rates, like you said, trying to time when it's a
Yeah.
good time to buy a property is not the best thing to do, because if you're going to jump out of a 4.5% variable right now to lock into a 5.5% fixed for the next 5 years, and if the rates happen to come down, your variable in 2 years might be at 3.5. And
Yeah.
so, just stay with what you know if you start with something, stay with it. I always tell variable people, look, if you're going to be looking at the rates every day and find, and if you're going to
Yeah.
be nervous about the rate, about your payment potentially increasing, you're not a variable person. Go with the fixed mortgage. Pay a little bit more today for the peace of mind of knowing what your payment's going to be for the next 5 years.
Yeah, and I think because of the Bank of Canada rate, everybody's kind of like looking at this as like day trading. They can see like the rate going up, and
Yeah,
so it's like, you know what, you're not in your house for the next 5 days. You're in this for the next 5, 10, 15 years, and you got to treat it like that. And so
yeah,
yeah, it might be up now. That's a risk that everybody kind of knows. But when they come down, they're going to be lower than they're first of all they're always lower than fixed, but over the long run your payment is not it's not we're not, you're not going to be paying 5-6% forever. Definitely, they're coming down. This is just an unprecedented market. It's an unprecedented move in a lot of people's lifetimes. So it's something that you have to take it for what it's worth and not kind of look at every single time there's a rate announcement, everybody's panicking because like what's going on.
I know, but we know how it is with the media nowadays. It's
Yeah,
so difficult. And then another positive of a variable mortgage is that payout of that mortgage is a 3 month penalty.
yeah,
Payout of a fixed mortgage is the higher of a 3 month interest penalty or the interest rate differential. And
yeah,
nobody knows what that calculation is.
yeah,
They just throw this number at you, the banks. I mean, it's
yeah,
technically supposed to be the difference between the rate that you have. What they do is they say when you got your mortgage, how much of a discount did we give you on it?
yeah,
So they use their posted rate, which is this crazy rate. They actually give you, for example, the bank 3.5, but their posted rate at that time was 5.5. So you got a
yeah,
2% discount. So now they say you have that's a 2%. How many years are left on your mortgage? There's 3 years left. How big is your mortgage? 500,000. So 500,000 mortgage, 2% discount you got is 10,000 times 3 years left. Pay us 30,000 to pay out a $500,000 mortgage.
yeah.
Pretty crazy.
Yeah, no, I mean, and I've seen penalties for fix as high as 80 to 100,000, but so it's insane. 30, 40,000 is very normal, and people don't realize that until you know what, because people are like, I'm going to be here for 5 years, but you get a new job, something happens, your
Well,
kids move, whatever.
yeah, but if you're taking a variable mortgage, your payment will only be 3 months
Yeah,
interest,
yeah,
not that 30 grand. So it'll be
yeah,
like 6,000,
yeah, yeah,
which will really, it'll really, you'll be like, oh my God, okay. So think of it this way. If you had taken that fixed mortgage and had saved and had a lower rate than today's variable, but then turn around and sold your house,
yeah,
you'd have to pay a $30,000, $40,000 mortgage. You're not thinking about that because the variable guy is going to just pay that 3 months penalty. So yes, he's paid a little bit more in the last year because rates are up. He's paid an
yeah,
extra thousand on his mortgage, say. That's 10,000 or 12,000 more. But when you're paying out your fixed mortgage and you're giving the bank 30 or 40,000,
yeah,
that's something you never thought of. That's money out of your pocket.
yeah. No, 100% agree. Yeah, you know what? Thank you for joining us, Gus. If any of my listeners again want to reach out to Gus, I'm going to be putting his contact information on you can find it below or on the side, depending on where you're listening it from. Thanks for coming on, Gus.
Paris, thank you. You have a wonderful Thanksgiving.
You too.
We'll talk soon. Thank you.